All right, so welcome to another video. Today we're going to take a look at Under Armour. Under Armour right now is struggling a little bit after earnings, so we're going to take a look at that. Keep in mind, none of these are recommendations to buy, sell, or trade anything. Just my own personal thoughts and opinions. All right, so let's kick things off here. We've got UAA. Under Armour, top estimates, but shares fall as supply chain issues hurt growth. Really? Well, maybe that's one thing, but there's maybe other things. Market is just weak in general, shaky, that kind of thing. Anyway, point being is the stock is tumbling a little bit today. So let's take a look at what can happen here in the stock, and I'll share with you some support and resistance levels as well. So you can see today we are down about 12% on the day. If you look at kind of the 5-day, we're down about 10%. The monthly, 6 months down 31%. Oh my goodness. And 1 year down about 23. So you can see the stock had a little bit of trouble around 25, and then we just continue to be going down lower. Okay, so let's check out UAA. I'm going to start out with kind of a monthly chart. So what you can see is this stock did really, really well back in 2009, continued to explode, looked fantastic. We got into about $50 per share, and then we got into this $30 range where the stock had some upper end problems at about the 30. We're trying to hold support at about 10, so we got down into those levels, and we've kind of been going sideways since then. So this is kind of a couple of the big levels to watch. We did break a little bit below that, but other than that, right now we're just kind of in this sideways range. Now that stock, as it got into that $30 range, or really 25 or so, pulling back a bit. So watching these couple of key swing point levels, you're now in this kind of sideways range. So let's zoom in and take a closer look into that. So we're now in the sideways range. So the question is as we look into the sideways range, what's been going on and happening? Well, you could see there was a gap here. So with that gap, that became a little bit of a problem, and that's kind of where we're getting a little bit of that resistance area. That 10 seemed to hold a critical support level. Okay, so watching some of those levels, looking at some swing points here. Look how that digestion right here was also going sideways. So all of that really kind of panned things out. So the question is can you nibble at a place like this? No, not yet. It's not down at lower levels. You need to be a little more careful. Let's go into maybe a daily level. And what you'll see here is, remember, we were up at that $25, $30 range. So here it is. We've got resistance, resistance, resistance. That stock is acting sluggish. 20 was support here at the shorter term, and we're breaking that. Okay, so we've had a few areas that tried to hold it. But now we broke it, we're coming up, and we're breaking it down again. So now we've got some issues, and this stock, looking at the volume, it's picking up some short sell on the volume. So in this case, anytime this stock bounces on any bounce, I'd rather be much more of a seller rather than a buyer, because there's a lot of huge selling pressure that's coming into it. Not to mention, if you look at kind of just the longer term trend, some of the bigger support, you're looking at a lot lower levels than where we're at right now. So I think it's still got room to go. Be careful. I wouldn't nibble. I wouldn't buy the dip yet. Let things settle, calm down, and then maybe you can get into it. But right now you've got some huge volume on the sell side picking up speed. This is breaking. You've got an A to B, B to C, possible C to D pattern there. That's also moving there. If you look at the fib levels, just real quick for you, you can watch the retracement here. You can see how it kind of lines up right into about that 61%, and that stock just started to roll over. So anyways, that's my take on it. I don't think it's doing so well, and it's definitely one to, I'd say, avoid for the time being. And watch some of those other longer term support levels for buying the dip or nibbling and that kind of thing. Because for now, you might just want to step aside and let things digest. The market is a bit shaky. We're kind of on thin ice. So anytime we get a pop, we're selling off. So you can see we got a pop for a little while, and now we're just rolling over the last couple of days. So be very careful with what's going on happening in this marketplace. It's very shaky, very tough, very tight, and it's uneasy. So be careful. Anyway, thanks for joining me. Hope you join me in the Traders Fly channel, so that way you can learn more about option trading. We've got some great classes coming up, so check those out, from risk arrays to swing trading that's just completed, and definitely a lot of things going on. So check out the website and see all the latest live things that we're doing from the classes, which sometimes are 8 to 10 hours long, where we go multiple nights. Anyway, thanks for joining me. I'll see you next time.